So I believe the issue with most finance channels these days, and especially ones on a bigger scale, is that they don't show their entire net worth and their entire portfolio. They'll show you the stuff they want you to see. But for the last 3 years on this channel, I have been completely honest and transparent with all of you guys. I've even shown my portfolio underperforming and shared the lessons that I've learned and my losses along the way. Whether it be Tattooed Chef, 3M stock, or any other mistake that I've made, I share it every month here on the channel. And that's something that I do till this day.
To this day! To this day!
And before we get to our video, I want to say a huge thank you to our channel members, Parker, Redwood, and SoFi Boy Major Speed. Thank you guys very much, and let's get on to the video.
Hello, I like money.
Currently, my portfolio value is sitting at around $23,370. From last month, that is up about $700, and that is all gains. I have not added any new money to the portfolio since then. But this is the transparency part, and this is the part that not a lot of finance channels will show. Compared to my portfolio, the S&P 500 is currently outperforming since May 31st, which is the largest eligible date that I could find to compare the portfolio. I like to compare in a longer term time horizon, but I'm absolutely not worried about the underperformance whatsoever. First of all, the S&P 500 right now is heavily driven by Nvidia, which has gains have absolutely been insane recently. I would personally say that they're in a bubble, and it's pretty hard to compete with a company that's up 225% in the last 1 year. I'm not worried about this short-term underperformance, and especially with the reconstruction of my portfolio and moving into more higher dividend growth focused companies, I'm really not worried whatsoever. There is going to be some short-term struggle there, and there are some companies that are kind of sandbagging my portfolio, but I've sold out of those or trimmed those positions. Every month in every portfolio update, I feel my portfolio has really grown qualitatively wise, and I'm getting more core holdings in my portfolio. Eventually, I want to trim down to 10 to 15, maybe 17 max positions in the portfolio. Also, a huge part of my plan to outperform the S&P 500 over a long-term time horizon is really letting the compounding effect happen. I believe over my time horizon, which is 20, 30, 40 years, if I can let my money compound, reinvest my dividends every quarter, and buy awesome companies that produce a lot of free cash flow, I think it's achievable. And FYI, I do not recommend you try this whatsoever. Just buy VU. If you're new to the channel, quickly, here are some of the qualities that I look for in every single stock/business that I own. First of all, free cash flow. Free cash flow is the most important metric for me personally. That's where you're going to be getting all your returns, your dividends, all that good stuff from. I look for businesses that have logical shareholder returns. Ideally, when a company's stock trades down a lot, that's when they ramp up the share buybacks. And when their stock is trading up, that's when you increase the dividend more. An example, this is Altria. I look to buy my stocks at fair or undervalued prices. I don't want to overpay for my companies because overpaying, even if you're overpaying for the best business in the entire world, that's still how you lose money into the stock market. But over a really long-term time horizon, I'm not against overpaying a little bit for an awesome quality business. An example is Costco, and you really can't time the top or bottom either. Just keep the same energy when the stock goes down. I look for strong businesses with qualitative measures. These are things like brand value, pricing power, and all that other good stuff when you look for in a really strong business. And great management as well. I want management that I can trust and management that I don't have to worry every night when I go to bed if they're going to do something stupid in the morning. I want management that has a shareholder first mentality that prioritize cash flows and shareholder returns. So those are just quickly some of the things that I look for in the stocks that I buy. On to our buys and sells for the month. So to start off the month, I saw Apple getting in a really attractive valuation, and I would consider this fair value for Apple. So first, I put $25 into Apple to $179.59, and then when it went on a bit of a more dip, at $170, I thought this was pretty solid value for the company like Apple, and I put $75 into it. If it goes below 170 again, I'm most likely going to add more. Now, Apple, I talk a lot about on the channel. Their share buybacks are really impressive, and I'm hoping over a longer term time horizon, the dividend growth will pick up. Next, I bought 3 shares of Vici at $28.94. I think anything below $29 for Vici for me at this point is really solid. Right now, the big thing that's really hurting REITs and utilities is really interest rates. They use a lot more debt than the normal company, and a lot of investors don't like that. Any real man's investor who's investing for more than 10, 15, 20 years realizes this could be a really solid buying opportunity for a quality of the company like Vici. I've been prioritizing adding on this dip, and I built up Vici to be one of the core holdings in my portfolio, and I plan to continue adding if it continues falling below. Next, this is one of the big things. I sold out of my entire 3M position at a 38% loss. Now, this is a stinger, and this is one of those ones that I really don't want to show you, but I'm going to regardless for the purpose of transparency. By dollar amount, this is the biggest loss of my portfolio so far. I got $570 in cash to play around with, though. Some of the key areas I messed up with 3M is just assuming that past performance was indicative of how they do in the future. I built up a lot of my 3M position when I was kind of newer to dividend-focused investing, and a lot of people are hyping it up. I made an entire video on why I sold my 3M stock. I go a lot more in depth on it, but I messed up really badly there. But I'm happy that I moved on from this. I was kind of holding on for the purpose of hoping for an eventual recovery, and again, collecting that 5, 6, 7% dividend yield they have right now, and collecting a pretty nice dividend, which you're going to see in a second. Yes, it's going to suck to see about $50 in annual dividend income from 3M being wiped away. But I got to realize it's more than likely than not that they're going to be cutting that dividend eventually, and there's going to be a big sell-off when that does happen. And 3M's growth, revenue, and free cash flow growth in the first place, even with that dividend, really aren't impressive. And with a lot of that free cash flow being eaten away from all these lawsuits that they're dealing with, which nobody saw coming, it does not look appealing for me. So I'm hoping with 3M, with all my losses, I'm going to put the money in a compounding position that over the long term, I believe will make up for that loss. Thank you for your service, 3M. Say your prayers in the chat. You may be wondering, where did I put that $570 in cash from 3M? A good amount of it is stored up in cash right now, just sitting and collecting interest in my account, but I also did put that money to use. To start off, I put $100 of that into Costco at $732. Costco went on a bit of a dip after earnings, and I figured it would be a decent time to buy. Costco is also one of those companies that you really can't pick the top or bottom, but I believe over a really long-term time horizon, as I always mention on this channel, Costco might be one of those companies that's always a buy. Happy to add to that position, definitely. I also put $200 in Avicii at $29.29. Once again, lower interest rates, I think it's a good opportunity, and I'm going to be building up my dividend income there, and it'll be a bit of a supplement there. I'm getting a Avicii dividend the next week, and if you want to see how much I get, I think it's going to be pretty big. Join the Discord link in the description. I put $50 into Starbucks at $91.25. Starbucks has been a huge dip recently, and I'm taking advantage of it. Right now, I'm actually about flat on my Starbucks position, and I'm happy to add more at these prices. A lot of people are fearful over them in China right now, some of the union issues and Middle Eastern issues that they've been having. I think it's a really good long-term buying opportunity for a company like Starbucks with awesome brand power, and their quality is quite literally at a peak right now. I bought 2 more shares of Avicii at $28.72, the lowest price that I got to buy it this month. Really happy with that price there. Then I bought 1 more share of Starbucks at $90.84, really solid price as well. Below $90, I will be hammering more Starbucks. And then, this is a new position, and it's an ETF. I bought 1 share of SCHG at $93.39. I have an SCHG analysis video coming this week, but essentially, I'm going to go 10% in SHD and SHG. I hope SHG will make up for some of that underperformance from SHD. I also do believe right now it could be trading at a bit of a high. You never want to time the market. You can't predict the top or bottom, but I am adding very conservatively right now. If Nvidia goes down, SHG will go down. So we're adding conservatively right now. I'm most likely going to dollar cost average in. With that said though, I will go heavy if there is a big decline in the market, which likely will affect SHG. I'm really happy with this position though, and I'm happy to add a new ETF to the portfolio. So it's a pretty active month for the portfolio, and I definitely think we improve qualitatively wise. On to our dividends for the month. To start the month off, we got $4.57 from Kroger, which I reinvested back into them. I also got about $3 from Visa, and I'm happy that position has been building up. Then I got a nice dividend from Target, stock ticker TGT, at $7.92. Then I got my last ever dividend from 3M, which I got $9.19 from them, 55 cents from S&P Global, which I reinvested back at a decent price, $4.57 from Microsoft, stock ticker MSFT. The middle of the month is always a good payday. I got $4.30 from Realty Not Reality Income. That is a non-qualified dividend, by the way, because they are a REIT, a monthly paying REIT. Then I got $2.18 from NextEra Energy. Happy to reinvest at these prices for them. $5.31 from McDonald's, stock ticker MCD. Then I got $15.99 from SHD. Now this is a bit of a slower month for SHD, as March historically is for them, but I'll gladly take that money and reinvest it and let the compounding begin for them. Next, I got $1.23 from Texas Roadhouse, a whopping 56 cents in interest from Schwab, and then $1.76 from Waste Management. I got $61.73 for the month of March, which is down about $15 from our last paying month for these companies in December from $74. It's unfortunate, but it needs to happen. I improved my portfolio a lot quality-wise this month, and this is probably going to be the low when it comes to dividend income, but I think next month is going to be a pretty big month too, especially with that Vici and Altria dividend. I'm really looking forward to both of those. So if you guys aren't already, make sure to subscribe and turn on post notifications, and if you don't want to wait every month to see every buy, sell, and dividends that I get, make sure to join the Discord where I share them real time as they happen. You can also find me on Twitter at Ryan Dengler Show. Thank you all for watching. Smash the like button, subscribe, check out the Do Dividend Stocks Not Drugs merchandise, and have a good one.